Namaste, salam alaikum, vanakkam, sat sri akal, and a very pleasant evening to one and all. We are here for the 8th session by the collaborative traders under the able guidance of Mr. Jagan. Well, fellows, due to some reasons, we could not conduct the last week's session. Those who following the group would have got the updates as to what's the reason. Well, getting on to this week. Before we start the week, I would want to make certain announcements. We've been making those earlier as well in terms of everybody who wants to have access to the YouTube videos. You need to fill up the Google form. If you share the email ID, you will definitely receive the email with the link to watch the video of all the previous sessions that have happened. Apart from that, you need to share, like, and subscribe our YouTube channel also, because we need to get as much mileage as we can. Apart from that, there's also another trend that's going on in the group. People are coming up as volunteers, but that doesn't mean that we just start calling people around. People like Sanati, people like Ajish, people like Sashi or Nilesh. They're putting in the effort, but at the same time, I hope you guys understand that attending to probably 10, 20 calls in a day of people calling up, obviously they won't be able to handle those many number of calls. The right place to ask your questions is the Telegram channel. Place your question, and believe me, these people will get back. And you've seen that happening earlier also. So that's something that I wanted to address. Basically, we need to maintain the decorum. We need to give the space that the volunteers need. Okay, so whatever questions you have, just bring them up in the Telegram channel itself. Having said that, let's start today's session. We got 3 volunteers today: Nilesh, Arvinda, and Rakesh. I guess it's going to be an exciting session again, with CPR being discussed, with Renko being discussed, and Bolinger bands being discussed. First up, we've got Nilesh coming across. Nilesh, I hope you're in. Nilesh?
Yes, I'm in.
Yeah. So Nilesh is going up first. And I don't think Nilesh needs an introduction anymore. He's been there for all the presentations that have been happening. So, I feel like starting to call him the Bolinger band guy. The Bolinger band boy, probably a triple B out here. I hope Nilesh, I hope you agree.
Yeah.
That's okay with you. The Bolinger band guy, everybody would agree with that as well. So he's going to be presenting the Bolinger band again today, and he's going to be talking about the third standard deviation over here, and he's going to be elaborating further. Up to you, Nilesh. You could just share your screen, please.
Yes, I've already shared my screen. Can you see it?
Just confirm. Just hold on. Yeah, just hold on. Yeah.
Okay.
Yes, pretty visible now.
Yeah. Thank you, Avinash. Hello, everyone.
Over to you, Nilesh. Yeah.
My name is Nilesh. Today I'll be presenting Bolinger bands with a slight different twist. Now, previously, during the first Bolinger band, what we did was we used 20 period moving averages. Now, this is a completely different strategy where we are using 30 period moving averages. Why we are doing it, I will explain it to you. First, we will just go briefly over Bolinger bands, because there are a lot of new people in this group. So what are Bolinger bands? Bolinger bands are price envelope. It is basically a volatility indicators. Since we are trading options, we are into options. These three things become very important. TVM concept becomes very important to us. Like for trend, volatility, and momentum becomes very important. Bollinger Band being volatility indicator, we use it helps us identify overbought, oversold territories. Trend it can be used as a trend following tool. It can be used to monitor breakouts, like we have already seen the band walk concept, which we did it in 20 period moving averages, the last lecture. The advantage of using Bollinger Band is it can be used in most time frames. For example, you can use it for 1 minute to 5 minute to 15 to hourly, weekly, even monthly. You can use it. see, the thing with Bollinger Bands is it answers a question called as, are the prices high or low on a relative basis? High as in if it is above at the upper band, lower if it is at a lower band compared to the mean. The mean here is 30 period moving averages. Now, why we are using 30 period moving averages? We get a extra stretch when we use 30 period moving averages. It gives the price extra margin. Why I'll come to it. Just see this. Can you see? There's a 20 period moving average line, and price touches it, it bounces back, but it touches it multiple times. Now, when we use 30 period moving averages, you see how it respects the price respects the moving average. It touches it and then it bounces, touches it. It avoids multiple signal, and it helps us taking. This is help us take good trades. Since we are trading is a probability thing. Our aim is to get a maximum output from our trade and minimum losses. So let's come back to standard deviation. I have explained this concept in detail, but I'll just go through it shortly. See, what happens is whenever you use a Bollinger Band, there's a mean, there's a upper band, there's a lower band. Whenever we use one standard deviation, 68% of the times the price falls between that region. It will go to the upper band, one standard deviation, it will come back to the mean, it will again touch the lower band, and something like that will happen. But this only covers 68% of a price range. What about the other? So what we do is here we are adding 2 standard deviation and 3 standard deviation. When we use 2 and 3, it covers 95, and totally it covers 97. And since we have increased the mean, we have changed the setting to 30 period moving average. What happens is this 99.7 becomes more. Maybe it will turn into 99.8 something or something more. So price basically respects this. Very rarely you'll see there are rare events where you'll see the price goes outside third standard deviation in extremely volatile situation. Usually morning trades or very extremely volatile situation. I'll show you on graph. I'll first explain the PPT and then we'll go to the main trading view chart. Now, Bollinger Band consists of 3 components. These are the basic components. There's a middle band. We are using 30 period moving averages. There's an upper band, which is 2 standard deviation from the middle band or the mean. Then there's lower band, which is 2 standard deviation lower from the middle band. Now, there's a concept of mean reversion. What mean means? Mean is average, and reversion means returning backwards. Now, I'll take an example. If you're going to Pune from Mumbai, the distance between Pune and Mumbai is 3 hours. But unfortunately, if someday there's some issue with the highway, the Western Express Highway, the distance might get 6 hours or 7 hours. But after a week or some other time, even if you're leaving your house, you'll leave 3 hours before, 3 or 3.5. That becomes your mean. Now, in financial theory, after an extreme, just 1 minute. Okay. What happens is after an extreme price move, asset price tends to return back to the normal or average. Price routinely oscillates between the in and around the mean. I'll show you this concept. You might have used it, but you don't even know. Like, for example, many of you are using Super Trend and VWAP. I'll show you just a example of this. Just 1 minute. Now this chart, I'll just change it to. I'll change the time frame to 5 or 15 minutes. Here, the VWAP acts as a mean, and can you see the price goes up? It comes to the mean again. It goes down. It comes to the mean again. So this pattern occurs every day in the market. So this is what mean reversion is, and this concept we are using it for trading. What happens is that price tends to return to the average, and extreme price moves are hard to sustain over a longer period of time. Even if we consider our market, during December or October, we were reaching roughly about 40,000 on Bank Nifty, 18,500 on Nifty. What happened is it corrected and it reverted back to what levels we are. Now it is correcting. And this is also applicable to stocks. For example, stocks which were shooting higher up during Corona or pre-Corona, they came down. There was a correction. This is the reason they emphasize on going for stocks which have fundamentals and technicals very right. Now, what we do during a mean reversion strategies is we try to capture points whenever the price is at the extremes. For example, if the price is at the upper band, you will take trade, you will take a sell trade and exit at the mean. In case of Bollinger Bands, you'll even take it further, depending on the confluence and other indication from the indicators. Now, what in Bollinger Band, what mean reversion means and what it helps us, where it helps us. What happens is in a range bound market, you'll see this thing happening. This is just to show you what happens. This is not our exact chart. This is just as a reference. See here, can you see the cursor? Here it touches the upper extreme, and here it will come down. It came down to the mean and it went down. Again here at the lower band, it touches the lower extreme, second standard deviation in this case. It goes back to the mean, and then further this pattern continues throughout the, even in a range bound market. Like yesterday there was a squeeze. This kept happening. I'll show you in the chart, but let me finish this PPT to get your concepts correct. So this is what happens now. Indicators such as Bollinger Bands use standard deviation to measure how far away the price is from the mean. The further the standard deviation from the mean, the more likely the price is to revert to the mean, although it may not happen right away. So next thing we are doing is we are using RSI. Now, Bollinger Band being lagging indicator, we are using RSI, which is a leading momentum indicator. We pair it. This is the most beautiful pair you can ever you can see. Bollinger and RSI, they go together very well. Now, what we have done is we have changed some settings. We are using two RSIs and we are merging them. One is RSI 5, one is RSI 9. Now, a little bit about RSI. RSI measures price change in relation to the recent price highs and lows. The default setting we use is 14. Why 14? Now, I spoke to Jagan sir, and Jagan sir told me this concept. What happened was RSI was invented in 1978 by J. Welder for commodities market, and commodities used to be traded for like 28 days back then, even now. So what we do is we divide 28 by 2, and that is the reason we get 14 as a default time period for RSI. What we are doing is we are changing that to 5 and 9. When we do it to 5, what it does is it calculates the last 5 candle periods, and it gives a much sensitive signal. And RSI is 9 gives us a less sensitive, but it gives us a, here you can see from this chart, this purple line is RSI 5. It is sensitive, since that is the reason it is moving up, and here also it is moving down. It will give you a lot of signals. That is pairing it with RSI 9 will help us. You can take a trade. Here also you can take a trade, because here you can get a proper signal. Now the difference between these moving averages, if it is expanding, it also shows that we are getting a good trend. Next, I'm going to explain is divergence. See, this concept of divergence is in everywhere. Is in like 4 or 5 indicators everywhere, as in the chart we use. You can see this divergence happening in MACD. You can see this happening in stochastic. You can see this happening in RSI. So what is divergence? The indicators show opposite direction to what the price is going on. For example, if the price is going up and the RSI or these indicators, what I mentioned, are going down, it shows a bearish momentum. And here it is. This is how it goes. If the price is going up and the RSI or NMACD or all other stochastic, if it is going down, it shows that this trend is going to end, and that is the price will move lower. Same with the bullish momentum. if the price is moving lower and this we have the RSI is moving higher, this shows a bullish divergence. This indicates that the price is moving up. Now, in this case, this also suggests that the trend is slowing down. For example, if there is a bearish divergence on RSI and the price is moving up, it will move up slowly. You will notice that whenever you see a divergence happen. It is rare on Nifty and Bank Nifty. I searched for like 30 days, but I couldn't find an example. But this happens, and this usually helps us at taking a good trade. Now, what divergence tells us is signals negative and positive movement of price along with the reversal, like I've already said. Now, I would like to take 5 minutes and explain this concept. See what is common between Venezuela, Syria, Afghanistan, and Somalia. Somalia is a very good case study. See, these countries don't have a strong political institution. There is a guy named Darren Asimoglu. He came up with this theory. He said a weak political institution will cripple a country's economic system, economic institution, leading to a chaotic situation. Now, what happens is Venezuela is the second largest reserve of oil. There's a Gulf of Aden. Somalia has it. Afghanistan has rare earth materials roughly about $1 trillion or more. See, in this country, if you see, there isn't chaos entirely. What you will see is there are, for example, Afghanistan has Taliban ruling it. Syria has ISIS. Venezuela has oil mafia. Somalia has clans. So what happens is these people, they form a order there. So whenever you see chaos, there's also a thing called as order in chaos. Now, and whenever there's an order in chaos, what happens is there's something known as tribal instinct that kicks in. For example, whenever there's a chaotic system, now I'm bringing this because whenever you see an algo, your behavior will change. You'll be like, oh, what happened? I've lost my points, and the entire day goes. You feel bad. What happens is, for example, in a country, these countries are mentioned. Your survival instinct kicks in because there's nothing much to do, and your whole process is to survive and feed your family. That is where your tribal instincts kick in. This is similar to what happens in our market. Whenever there's bloodshed or any kind of volatility, it targets our emotion. This is what William Fractal did, and he created fractals based on this. He used chaos theory and trading psychology, and he found out repeating patterns and stuff. Fractals are, now I've mentioned fractals before. I'm not going too deep into it because we have limited time. Here this indicators uses 5-bar model, which is used to possibly identify reversals. Now, where you can use fractals, okay? Fractals are used for determining potential stop losses. It can act as support and resistance. I'll show you the support and resistance levels. It can use to tell you that there is a high, low, or there's some kind of trend reversals. It can also tell you about potential entry points. This also I'll give you an example. Now, just shortly I'll explain. Fractals, there is a thing called as self similarity in fractals. This is a very good concept. If you're too much interested, you just watch research about it, read about it. This will this fractals will show you a V-shaped patterns whenever there's a formation. If it is forming at the top of the upper band, it will show you a V-shaped pattern and the price will move down. Similarly, it will show an inverted V pattern. Now this is how it looks. See, this is a 5-bar. We can change the period. The one we are using 2 period. But this is just for example to know what fractals are. This is a fractal up, fractal down. This is also example. You can change the period and you can add 7, 8 or whatever you want, depending on how your system is. Basically, if you're using lower for if you're increasing the period, that is for swing trading. For example, you're trading for a long time. You don't you consider Renko and other stuff. You can increase this to 7. We prefer it for this setup. I'm preferring it to 1, keeping it to 1. So this will be my chart. I'm using Heikin-Ashi 3-minute time frame. indicators we are using is Willy. The standard setting is 75, 80, 20. We are doing it to 75 minus 25. Then there's KDG. We are removing plot from here. I'll show you what we are doing exactly. There's the Bill Williams alligator, the same guy who created fractals. It uses 3, 5, and 8 period moving averages. RSI 9 and 5 already explained. William fractals I've already explained. Bolinger bands we have done. I've done it, and GI is already explained. Now this is our entry, exit, and stop loss conditions. Stop loss conditions will buy whenever the price touches the lower 3 standard deviation or 2 standard deviation in the direction of the mean. I'll come to the chart. This is just to tell you. And we will sell whenever it is at the top band. The price touches the top band, 2 or 3 standard deviation, preferably in the direction of Bollinger Band mean. People who keep targets, second, if it touches the 3rd standard deviation and the price is you're taken a sell trade, the 2 standard deviation could be your first target. Second target will be your outer band of first 1 standard deviation, the upper band. Third would be your Bollinger Band mean, and you can also take it down depending on how the trend is, how powerful the trend is. You can also take an exit at day highs or day low, depending on where you're taking a buy or sell signal. These are the exit routes. 1 minute. Initial stop loss, break even stop loss, or you can exit after 20-30 minutes. The price is not moving. You just put your stop loss at your buy price and just exit. Now this is how our chart looks. This is just an example. I'll come to the main chart now. Just give me 1 minute. See, this is our main chart. Now there are a few settings I would like to show you. First thing is I have merged 2 RSIs. I'll show you how you should do it. See, there is this. You come to the indicator. There are these 3 lines. You click on move to. You can add it to existing pane, new pane above, existing pane below. I'll show you. I'll just make a change and I'll just quickly rechange it. So yeah, what I've done is I have taken it out. Now I will add it back. Again, 3 existing pane above. See, can you see? It worked. Now, one more indicator I would like to talk about is KDJ. I've done the same thing. Where is KDJ? Yes, here. Yeah. Move to new pane below. I'll just, okay, it went up. Now, what I've gone to the settings in KDJ. In style, what we have done is we have unticked all the plots and we are just using color. I'll tell you the reason why. Whenever you'll see I'll bring it back. Okay, back. Whenever you see a green portion, you'll never take a opposite trade, as in you never take a short trade. Here you will only go long. For example, even here only you will go long. In this case you will go short because it is in. You will never take a long signal in this. Now the concept of mean reversion and everything. Okay. Now let's consider Friday. I'll come to this algo candle later on. We'll start with the 9:15. You take a trade. Now it touched 3rd standard deviation, but you don't take a mean reversion trade here. Whenever the market is trending, please note down this thing. Whenever the market is trending, don't take a mean reversion trend because even if you take a mean reversion trend, it will come to this portion. Now this is horizontal to this. You won't gain much. For example, even here, here it moved for roughly about 150 points, but it didn't move much. Ideally, if this was an upper band and this was a lower band, and the mean was flat or a slight vertical, you would have gained a lot of points. Now I'll come to this trade. See, it touched the 3rd standard deviation. So I know for a fact that it will come down. This is a morning trade. It touched the 3rd standard deviation. Now what happens is it is trying to come down. And here I got a signal from KDJ, but I'm not entering here. Here is the idle portion where I also got a signal from RSI, both the RSI 5 and 9. And Willy, here is the portion where I enter, I get a confluence and I enter and I exit at this point. Here it touched the mean. This is roughly about 150, 120 points. Now, since it touched the mean, it could either reach the lower standard deviations or it could reverse. Here it reversed, and here was a reversal trade. This was a signal. This was a Heikinashi doji was the first signal that that could be a trade. And see the GI. Can you see the GI? There's a confluence here, but ideally you will take a trade here because we are humans. There's some lag, so you take a trade here, and this roughly gave about 150, 170 points. Here the more you get used to the system, you'll start taking trades that you'll notice here you'll take a trade here itself. I took a trade here because I followed the system for a week. Now again, let me zoom this chart. I'll come to the confluence later. Here, see, here it touched the second standard deviation. It is not moving up. Here there's a red candle, again a red candle. So you can tell for a fact that it is going to revert to the mean. Here it reverted to the mean. It has obeyed the rule and it went down to the second standard deviation. So here I took a entry. I ideally the entry is here, or if it touches here, it is not moving up, you can take a trade here also. But since we have decided we are not going to take a reverse trade, this is the green zone, we are not going to take a short trade here. So we'll take a trade when there's a confluence. But we know for a fact, seeing the body chart only, you don't have to see other charts. Seeing the body chart only, you can tell that the price is going to fall down. Now you'll take a trade here or even here, and here it respects and it comes to the lower standard deviation. Here again, you can just exit blindly, but there's also a confluence here. See, can you see? There's a confluence. It tells us you have to exit. Now I'll come back to this portion. Here it touched the second standard deviation. Here again it touched it, but it couldn't go any further down because it lagged. So here you can expect a reverse trade. Here the first standard deviation could be your first target. Mean is mean. It will come back to the mean. This will be your second target, and then you can just keep this as third, fourth, fifth target. Here it touched the second standard deviation. It reverted back to the mean, and it went further to the upper band, and then it again came down. See, it is the third standard, it will come down. See, here it came down, but we are not trading here because see, this is a tight squeeze. You won't get much profit from this period, this portion. I have explained the concept of squeeze, but again I'll go through. Whenever the price is between the first standard deviation, never trade. If it is around the trading around the mean, there's not much of a volatility, never trade. See, else it will keep hitting your stop losses. If you're a deep scalper, like Jagan sir tells us, you can take a trade here, but trade carefully between these regions. This gave me roughly about 215 points. You could just take a trade based on the chart. You don't need other indicators, but we'll use it to have confluence, because we don't want to miss out on points here. Why this will be our exit? Because it touched the third standard deviation. You could have taken a exit here based on the signals, but this system tells us before that you can take an exit. But if we wait for the indicator, because price might move higher, the band might stretch, which is why we use other indicators as a confluence. Now coming back to this candle, Jagan sir, sorry,
Nilesh,
yes sir.
Sorry to interrupt. Just go back to 1214 on this one. That's a good example.
Here?
Yeah, that example on the starting of the green. Yeah, KDJ. I then go to the indicators. I want to see the confluence. Yeah, just start the starting point of the green band of KDJ. Yeah, now you go slightly to the left. That red candle, yes.
Yes.
So now you should see the Willy, RSI, and the GI
GI.
index, and then the starting of the call side, right? The
Yes,
trade.
sir.
This is the point you have to take an entry on the call side, okay? So, or the long side. And then the exit is coming. Now, can you mark a vertical line here, please? That
1 minute, sir.
exact confluence point. See, this is what you should explain more clearly so that this vertical lines really helps. Then, no, it has to be blue, as you know, yeah. And can you mark the exit exactly
Yes, sir. 1 minute.
where the exit confluence is there? Actually, it's the ending of the KDJ, actually. You
Yes,
know,
sir.
yeah,
For
almost. But we'll put a precise point.
here, black.
Little to the right.
This one, black
Yes,
one.
one more candle. See, that is the point. You now look at again Willy RSI crossover and also the GI at this
Yes,
point.
sir.
Now, see, out of these four indicators you're using, one may give you an advanced signal, one may a little bit, but it's a question of you're using a 3-minute candle.
Right,
So
sir.
within the 3 minutes, only your problem is only for those 3 minutes. You can exit at the close of the candle or when the candle is about to close itself. So now this is one clear entry and exit, right?
Yes, sir.
Yeah, when there is a confluence. So
One more thing I will tell you.
this is
See,
215 points or
yes, sir.
even more. Can you measure it? How exactly these points? Precisely, I want to get that.
212, and if I exit here, I get 230 plus points.
230. Now, see, Nilesh, I would prefer you to stick to few example and explain
Yes, sir.
thoroughly.
Yes, sir. I'll
So
explain
we
thoroughly.
understand. So this is the way, and now the most important thing is that KDJ background. It is actually giving with Equinati, it's very clearly giving you the exit and entries. The only thing is it is slightly 3 minutes above and 3 minutes after where you see the confluence. You see, so these are all very safe trades, and that is why this KDJ background is put so that to guide. And as you said, Nilesh, that when it is on the green, never take a short trade. When it is on the red or rose color, pink color, never take a long trade. Okay, this is the rule.
One more thing I would like to explain is, see, whenever it touches the third standard deviation, you should be ready to exit. As in, don't exit yet, but prepare in your mind that there's a exit coming very soon. For example, this you could have exited here, or this red candle would have told you to exit, or you could have waited for the confluence and exited here. The more you spend time with the system, you'll get to know. You won't need much of the other indicators. Now, coming back to this candle, this saved me yesterday on Friday, and this was the algo candle Sanadip sir was mentioning. See, what happened here is it touched the third standard deviation. Why I took a trade here? The price here was I was taking about 35,700 or 600 something. The price it came down to 355, and I took a trade because it was very fast. I got a trade here at 364, and then I exited here because it went above the third standard deviation. Now, why I took this trade? The reason I took a long trade here, you would have you might have a question that if it moved down, it wouldn't move down because the KDJ is giving us a green signal. See, it is a green. So what I've already said is never take a short trade in this thing. So I was very sure, and this is how I got this trade saved me. Actually, it gave me a lot of points here. Again, uh, here it touched the third standard deviation, so it is very obvious that it will come back to the mean. Here it came back to the mean, and it even went further. I haven't marked this because I didn't take an entry here, but you could have fetched roughly about 120 points from this portion to till here. Now I'll go back to other examples. This is Friday. I'll come to how you use fractals in this. I'll tell you. See, what happens is what we are doing is this fractal has a setting of 2 period. This is a standard setting. the period is 2, it will it will tell you the change in within it. Use 2 candles to tell you the change. So what happens is, here this portion, it gave you a fractal. So this candle low will be your stop loss when you take a trade here. You take a trade here, and this will give you, and again this will also signal you that the uptrend is done. Like I said, this will act as a it will tell you about reversals. So here you can take a short trade also. Like for example, you can use this as a stop loss, and you can take a short trade here based on the confluence of other signals, and you could exit later on with one for roughly about 140, 120, 140 points. Also, what I mentioned in my PPT is one more thing. See, it acts as a support and resistance level. It helps us determine highs and lows and trend reversals and potential stop loss. Now, why I said this acts as a support and resistance level is this. Now, let me just go over the chart. See, can you, if I mark a line here, it tells me about the supports. It tells me about the support level here on this line, and here if I draw a line, it tells me about the resistance level. For example, if I draw a line, I'll just draw it. Now I've drawn a line. See, can you see? It is acting as a resistance level. Even here it went up, but then it again, we are not trading after this because it was trending here. It gave us a signal, but it acted as a support and resistance level throughout. I'll just remove the line. Now, any other question?
Nilesh, you should.
Yes, sir.
There is a question, and I don't think you directly answered. You are talking about fractals and all. No, where should be the exact stop loss?
Sir,
That's
what
why it is
happens
fractal.
is,
So you have to
I'll tell
explain
you.
clearly.
Yes,
Yeah.
sir. Yes, I'll explain it. See, for example, this trade, I'll remove the here. See, fractal doesn't appear immediately. It will appear when this candle is formed. As I said, it calculates 2 candle. So what happens is, you take a trade, and then you will see a fractal happening. So you will place a stop loss here based on the lower level of this candle.
Can you draw a horizontal line so that?
Yes, sir. One minute. See, this will be your stop loss, this portion. Can you see, sir? Since it has formed, the fractal has formed here, you will change your stop loss to this level. This will be your stop loss.
So you're drawing the line, Nilesh, basis the low of the candle, right?
Yeah, low of the candle will be your stop loss.
Okay.
Any other question? There was one more. What is the ideal stop loss when we take a trade in 3SD? Yes, even in a 3SD, see here, for example, in a 3SD, you're taking a trade here, for example. It is reverting to the mean. So this candle high will be your stop loss. I'll again draw a line. I'll just move this line because it will. See, this will be your, if you're taking a sell trade, this will be your stop loss, and you'll just exit wherever you want. Ideally, you can exit here, this at the first target of the standard deviation, or you could wait till the mean. This is just an example.
Nilesh, there is
Yes,
another
sir.
question, which is some Rampal, right? So
yes,
he
sir, I'll
wants
show the
to
confluence.
show this entry. Now you are showing the body chart. He wants to show the confluence in those. Just one example where there is confluence and where this is.
Yes, Mr. Rampal, can you see this? There's a confluence here. See, RSI, both RSI gave us a signal, the 5 and the 9. Then Willy also gave us a signal. Here, GI also gave us a signal. I'll just expand the chart. Yeah. Can you see the confluence? Just one more question. Yes, okay. And then again, now for exit, like I said, third standard deviation, you have to be ready. You'll be ready. You'll prepare your mind that, there could be exit coming. But then here, you can see a confluence of other indicators. For example, RSI and Willy. You'll take an exit here. Also, KDJ. You'll also have to understand that KDJ is also an indicator. It is also giving us an exit signal. You see this pink region, it will tell us you can take an exit here. Whenever you see a pink region, you can take a trade. How do you handle one-sided trending day, as there might not be much reversion? See, never go against the trend. What happens is, in a trending market, you'll just follow the indicators. For example, here, can anyone okay, this is a good example of trending. This is a 395 points move. This so where was it? Yeah, this I have taken an early entry because of the GI gave me entry. This 1 minute. Okay, see here, it touched the third standard deviation. It came back to the mean and it reverted from the mean. So what happened here is, just 1 minute.
Nilesh,
Yeah. Yes, sir.
no. Sorry, we have a time issue.
Yes, sir.
Two things. The question was to show the confluence. You have given a lot of examples on trading based on the body chart. Anyway, you have shown the confluence. Now we will go back to another question from Srini. Now he asks you, now if it is one-sided trending day, right? Okay.
Yes, sir.
Great. So I am slightly rephrasing this question to be in a broader context. So there may not be a mean reversion, right?
Right.
Or probably there'll be few. In which case, how do you handle that? That's his question.
Sir, this
My
is the
question
example.
is, an additional to that,
Yes,
is
sir.
can this Bolinger band 3R strategy is only a mean reversal strategy, or can you also trade based on identifying the short-term trends?
Yes, sir. So, whenever you talk about Bollinger Band is a wholesome strategy. You can use it for all the market, right? Trending market. You can use it for a range bound market. It will also help you identify squeeze. Now, this is an example of a trending market. Here, it is touching 3 standard deviation multiple times, and then again, it keeps on.
Nilesh, sorry,
Yes, sir.
please slow
Yes.
down. See, we have very little time.
Yes,
What
sir. Yes, sir.
the question is, we want you to show a trade, not a mean reversal, because you have emphasized throughout your presentation about mean reversal, but we want you to show an example, not a mean reversal, based on a trend direction.
Yes, sir. That is what.
Yeah.
Sir, can you see this example? This is not a mean reversion trade. This is where the market started trending and it gave a 395 point move. Now, what you're telling is, see here it didn't. Here we are not taking based on 3 standard deviation, or it is touching on the 2nd standard deviation. Here, what we are doing is, here we are using confluence of multiple indicators. For example, here RSI crossed. It crossed way before. GI also gave a signal way before, but here Willy was lagging. So here you take a trade here on the red candle, the long trade, and you just ride along the trend till you get a KDJ signal or confluence of other indicators. As in, here you got a confluence, and also KDJ told us that you have to exit. So you got roughly about 395. I will show you on calculate and show you.
Okay, Nilesh, good.
Yes, sir.
That's a good example. Thank you. Only one thing I want you to finish before you close your presentation.
Yes, sir.
Is about the time frames. Let me just quickly tell you. You already know it. I just bring it to context. This grandfather, father, son concept, which you have not done. You are not going to do it in detail. But what you mean is a primary trend, which is the grandfather.
Yes, sir.
And the secondary trend and the short-term trend. We are momentum traders. We are most interested in short-term trends. But while you take the short-term trends, how to keep the big picture in the mind? I want
okay. So what I have done is I've set up this chart. This is basically, I have used the Heikinashi and RSI in all these 3 chart. I've used nothing. This is I wanted to show this example. Otherwise, I've just used this 2. And what I've done is, See, this is Ali. This portion is Ali. Can you see my cursor? The third one is grandfather. I have used it 1 hour time frame here. And this middle portion is father. What I've done is I've used a 15-minute time frame here, this portion. And this is for what I've done is here I've used 5-minute time frame. Now, yesterday on Friday, me and Sanadeep sir were talking. What I've noticed was throughout the entire Friday, the hourly trend showed a positive thing. And on a so what happened was the RSI here was above 70. Even on the 15-minute, it was above 70. So what I knew was whenever there will be a dip here on a 3-minute or 5-minute time frame here, whenever there will be dip, it will be brought back and the price will move up. So this kept happening. Ideally, I was expecting that price to reach 3,500, 800, 35,800, but it didn't. It went to 35,700 and then it averaged around 35,600, 643 or something. So this can tell you. I've mentioned this chart. What's the question? If we miss to enter in the signal, can we enter in the middle of a trend candle? Looking at KDJ, or yes, you can enter, but don't take the reverse. Reverse. For example, if the KDJ is green, don't take a reverse trade like expecting it to go back or do something. Play safe.
Thank you. Let me just, Avinash, if you don't mind, just give me 2 minutes. I want to put the whole thing into context, then we can close this presentation.
Anyone has any question, please ask.
Yeah, please. Can I talk?
Yes, sir.
Yeah, sure.
Yeah, okay. Somebody, okay. Now, see what here, this grandfather, father, son, what basically means is the long-term, what you call the main trend, okay, the primary trend. That is the exact word, primary trend. There are 3 trends: primary, secondary, and short-term. So, as you all know, the whole thing was in bull market post-corona until we reached 18,350 on October 24th or 26th, I don't remember. Then the trend reversed. The FIA started selling, and then later on, so many developments came, the Russian war, Ukraine war, and all that. So the primary trend reversal happened on 24th of October last year. Then it was a bearish trend. So we are in that primary bearish trend. Then what happened? If you look at daily charts, this is very important that so that you are in the right side of things when you trade, particularly for beginners. Now, from 7th May, Nifty became, the short-term trend became bullish. That means the market started increasing slowly. Of course, there were ups and downs in different days, but the short-term trend is on the upside. Then what happens is, so this is the this is the secondary trend. The secondary trend is bullish now, as we speak now. And on, I think, 10th May, the Bank Nifty also turned to a intermediate bullish trend. So we are in that trend. Now coming to short term, we as day traders, we know we are taking both which is called the mini trend or the short term trend. We are taking both sides of the trade to maximize the points. But however, you remember, you are only safe when you are taking along the short-term trend, which is bullish now, okay? And that's what the chart is telling us. So some of the people who are risk averse, who really do not have that expertise or experience to take both sides of the moves, then it is much safer to be understand the intermediate trend and take only call trades, okay? So that way, even if you miss, definitely there are many chances of it coming back and you will get an exit. But if you are against the intermediate trend, even if you take a wrong trade, it is difficult to get an exit, okay? Thank you. So I think, Avinash, you can close this and then move on. Yeah.
Thank you, Mr. Jagan. Thanks a ton, Nilesh, aka BBB. For those who joined in late, BBB stands for Bollinger Band Boy. And you know why am I calling him that? Because it's primarily he owns the strategy. I mean, you from his presentations you can see the kind of hard work that he's put in, and nobody's stopping the rest of the group from putting in that much of an hard work. You know, come up, own your own strategy. Mr. Jagan is always there to help. You know, so. Thank you so much, Nilesh. Thank you so much, BBB. We move on next to Arvinda. Arvinda, you there?
Yeah.
Yeah. Arvinda, just share your screen. Till the time Arvinda shares his screen, a very important announcement, which I'll keep making in between the presentations. Everybody in the group, especially people who keep asking about access to the YouTube channel, you need to fill up the Google form. If you haven't, but you won't get the access to the Google form. That's straight and clear. So you need to fill up the Google form to get access to the YouTube channel. Also, request to everybody is please like, share, and subscribe the YouTube channel so that we spread the word. Mr. Jagan is doing some commendable work here. We need to spread the word, guys, please. So you share that. Please like, subscribe, and share the channel. Moving on to Arvind. A little bit about Arvind. Arvind has been a veteran investor, I would say, since 2005. He's been investing in the market in terms of long term. He's been investing in mutual funds. Off late, that's about in 2020, when COVID struck, he got into options and he's become a full-time trader now. So we welcome Arvinda aboard. And Arvinda hails from Tirupati Balaji, the land of the richest temple in the world. Basically, a lot of gold out there, and that's right, Arvinda. Correct? Correct me if I'm wrong.
Yeah, absolutely.
Yeah.
He's one of the I can say is the world's richest temple.
Yeah. Lot in terms of the gold that I haven't
yes.
Personally, but heard a lot about the gold there, and people visiting. Almost like how many devotees would be visiting? About 1 lakh or so in a day.
Yeah, if you ask me, for this month it is crossing more than 1.5 lakh.
Wow.
Per day. Wow. Because of holidays.
Wow. I guess you get all the blessings from the temple out there, from the Tirupati Balaji. Arvind, request you to take over the screen now. Arvind will be presenting CPR level CPR strategy right now. Over to you, Arvind.
Yeah, thank you. One thing I just want to correct from Avinash is at present I am not a full-time trader. I am a part-time trader.
My bad, Arvind.
Yeah, it's okay.
Stand corrected.
Yeah. So once again, welcome you all. I think many of them knows me with the 6th batch. Okay, coming to me, and I just want to explain a little bit before going further. I think I'll quickly explain about some hidden things I came to know about this Tirupati. Lot of people used to ask me for help for darshan, accommodations. And I came to know there is a lot of, indirect ways you can get the bookings through online. There is one of the way is you can book the travel through the Andhra Pradesh State Transport Service. Like example, the shortest distance, like Chennai to Tirupati, with the lowest price. When you book the bus ticket, the Andhra Pradesh Transport Service, APSRTC, they call short form, they allow you to book for the darshan, which is having some quota, means some reservation for the who is traveling through the bus. So you can while you are booking the bus ticket, after booking the bus ticket, it will pop up the window and it will allow you to see whether you have you can get the darshan ticket as your desired date from the travel date. So if you're along with the travel date, if the darshan ticket is available, you can book the ticket, darshan ticket, and you can pay that whatever the transport charges. Like nominal example, maybe now it costs around 180 rupees from Chennai to Tirupati. The thing is, you don't have to travel in the bus, but you will be having a darshan ticket. This is one of the technique which I came to know when I means my last working location was Pune. When I traveled from Pune to Tirupati, then I came to know this trick. So I have explained a lot of people.
That's really great. That's really great, Arvind. Thank you so much for the information.
So
anybody interested, can get in touch with Arvind directly.
Yes, I can help you. I can help you.
Let's start the presentation. Arvind, request you to start the presentation now. Could you just go on to full screen, please?
Yeah, sure. Okay. So I'll be explaining today CPR level based trading strategy, where we will be in first phase. I'll complete this presentation. The second phase, I will take you to the trading view platform. I will be explaining last 1 week. I have took few trades, but there are many entry and exits had happened. But due to time short, which I was focusing on the other entry and exits. So I taken a few trades, which I marked it in the trading view. I'll be explaining about this, and then we'll have a question and answer session. So before going to this CPR, first it derived with the pivot points. So pivot points, basically it is high, low, and closing price of previous day trading session. That means especially these pivots and CPR, the beauty of these things is you will come to know that next day the levels based on the mathematical calculation, which is already available. Like we know what is the today's high, what is today's low, what is today's closing price. So keeping those things, you will be deriving into the pivot points. So it is taking average, like high plus low plus closing divided by 3. So you will be getting the pivot points. So this is the beauty of this, the pivot points. So which you will be getting in advance. That's why we call this pivots as well as CPR is a leading indicator compared to the other indicators. So it's mainly work with the price action. That's why if I gone through a lot of studies and books, many times everything it is directly linked with the price action. So we need to be very skillful with the price action and candle patterns, candle charts, candle patterns, reading, understanding. Then what happens is the success rate with this strategy will be very high. So that's what I just trying to put it into this. And it comes to the pivot points. If the price is above the pivot points, it will be a bullish trend. And below the pivot point, it is a bearish trend. This is a general phenomena. But however, I strongly recommend don't just take it based on only pivot points and decide your trade. We need to combine few technical things, and we call in our group as a confluence. So there is 3 other indicators which we added into this strategy for the confluence. So I'll be going to that. So that's the important things. Again, I'm saying, please don't only based on the pivot point, don't do trading. You need to have confluence with your other indicators or with your, what you can say, regular base, how you are getting the experience of that. So then your chances will be very high. So this is the PP, which we can say that the central pivot points. And for this, you will have what you can say, resistance 1, resistance 2, resistance 3, and below is support 1, support 2, support 3. So basically, which I practice, I'm just taking it 2 levels, R1, R2, and S1, S2. Okay, and here the one more important things which I observed is whatever the time frames, the pivot points are stagnant. Whereas if you see in other indicators like MACD or RSI, whereas the values will be changing sometimes based on the time frame. The difference is not too much, but there is a change in the values. But whereas here, the values are fixed, irrespective of your time frame. But I'm taking 5 minutes time frame and with the spot chart, so that we can see. And mainly since it is a price action based strategy, many big players and professionals and institutions are using this pivots and CPR strategy as one of their decision making strategy. So how you calculate this? This is the formulas are available, but whereas we take the indicator, automatically the points, everything is calculated in the indicator. So we no need to go through this, the formulas and this one. But for your reference, in the beginning, you can just you can take the previous day high, low, everything. You can just calculate it, cross check it, whether it is giving the correct values or not for the next. So coming to this next is a CPR. So what is CPR? I'll just give you, go back on one step and come. See, in pivot points, you have a PP, that is central pivot line, and you have above R1, R2, below S1, S2. Coming to this CPR, you have, along with this PP, there is a top central pivot and bottom central pivot. So this is, we put it into a range. So that's why we call as central pivot range. So we already have a PP, which is a central pivot. For that, we are putting the range by naming it as a top central pivot and bottom central pivot. So keeping these three, we call as a CPR. So this is the central pivot range. Again, it is based on the price action. So mainly this Frank Ochoa, one of the phenomenon in this CPR strategy. So he has written a deep, what you can say, analysis, what you can say, strategies. There is a best, almost 15 strategies are there. One of the best strategies which is working with the CPR. So these are the strategies which is invented by him. And there is a lot of deep analysis is there. But due to time frame, I have taken a few things and we have explained this. So if you look at this picture, there is a CPR. You can see this, the central line is the pink one is a PP, differentiated with the other color. So TC, the blue line top, and again, blue line bottom, that is a BC. So whenever this price is below the CPR, it is a bearish kind of momentum. Whenever the price is above, that is a bullish kind of momentum. So this is one formulas. So coming to CPR, types of CPR, we have for trending market, we have a narrow CPR, inside CPR, and trend reversal CPR, ascending or descending CPR, virgin CPR. So in sideways, we have a wide CPR, outside CPR, camarilla CPR, ascending or descending CPR, and virgin CPR. Today, I will be discussing more on narrow CPR and wide CPR, and also virgin CPR. So what is narrow CPR? The distance between the top, pivot and the bottom pivot with respect to the center. The distance is very close to each other. Then it is called a narrow CPR. Similar way, vice versa, the distance between TC and BC is wide. Then it is called as a wide CPR. And what is the characteristics, or what you can say of benefit of this narrow CPR? Whenever narrow CPR, in general, it is a trending day. So if you see sometimes there is a narrow CPR, if it is formed. So if you look at that, whenever the next day, if the particular day narrow CPR, if it is not trending day, the next day, even though it is a slight wide CPR, it will be a trending day. I'll be showing the example in the trading view. So coming to the wide CPR, the wide CPR, the distance between the TC and BC is more. And in general, the wide CPR is either range bound or it is a sideways. So in most of the times in sideways market, we will not be, especially the intradays, we will not be doing trading on that. So that's one of the main reason in this wide CPR. So if you see the trending was there when you see the wide CPR, the candlesticks or it is in the sideways momentum. There is no trend in that. So coming to this Virgin CPR normally compared to narrow CPR or wide CPR, where the price is never touched the CPR range, and the Virgin CPR, one of the beauty is you can use this Virgin CPR level for next 4 or 5 days as a support or resistance. This is the very important things. Once you identify Virgin CPR in the chart, you please put the levels along with the Virgin CPR and keep that levels and monitor it. So definitely it will be acting as a support or resistance for next 4 to 5 days, or else it generate the next Virgin CPR. So this is the beauty of this Virgin CPR. So same this also I have an example, and we will be seeing in the chart. So if you look at this Virgin CPR, so on particular day there is a Virgin CPR is formed. So you can see that the candles never touch the CPR range, and sometimes there is some examples which I notice it. There is small wicks. It is penetrating into the CPR range. However, that the wicks is very weak, means that candle is very weak. Such cases you can still consider that as a Virgin CPR. So if you say next day, the day it's open between this Virgin CPR and it come back and it retrace, then it took the BC as a resistance, and the market has fallen down. So that is the what you can say main benefit of this Virgin CPR. So it acts as support or resistance for next 4 to 5 days. Please remember this. So you need to mark it from this Virgin CPR range. You can mark it with the rectangular with the shade and keep it for next 4 or 5 days, monitor it. After that, it loses its the strength till it generate the new Virgin CPR. So once you find the new Virgin CPR, then what you can do, you can delete this range and you can draw the next Virgin CPR range for your support or resistance. So that is the main advantage of this Virgin CPR. So coming to this, there is a morning trades, we call it as. So we have there is 3 types in direct and 3 types in reversal. So what is the 3 types in direct? If first 3 candles opening above R1 with green candles, means in the CPR above, and open green candles, it will be a bullish. Same way, if it open below with the red candles, it will be a bearish. So in the morning time, we need to notice it after that CPR range. If the candles are opening, is it above and its next 3 candles are green, then it is a bullish. So you can just observe it. If it is formed, definitely we can take it. And where will be the entry, where will be the exit, where will be the stop loss, we'll see in the chart. Similar way, there is a second method. If the candle open above CPR and broken R1 and PDH, it will be a bullish trend. So if the candle is open above CPR and it try to go up till R1 and it also broken PDH, so previous day high, so naturally that day the trend will be bullish trend. Similar way, the candle open below CPR range and broken S1 and previous day low, then it tried to be a bearish trend. This is the second method in the direct. So coming to the third one, if the candle open between CPR, the candle try to reach R1 or PDH. If not, S1, S1, most likely it will sideways. So in general, this technique was what I can say is, if generally candles open in between CPR, we don't do trading. So that is the general phenomena. But only some cases this third method was applied. But in general, practically speaking, whenever the price is between CPR, we don't do trading. So that is the standard rule. So coming to the reversal, so above R1 and below S1. If the candle open above R1 with the red color and it touches CPR and it reverses back, so then it will be a bullish, and same way it reverses, it will become a bearish. So this is the R1 and S1, one of the method. Then if it is open between CPR and R1, then CPR and S1. If the candle open again between CPR and R1, it go towards R1, it get rejected. So this is the reversal trades. I have 2-3 examples. I'll be showing it the reversal trades. Many times I taken this reversal trades, because what happens is we get a confirmation saying that price is retraced, then we are taking in that level. So that we have a double confirmation, definitely we'll be going towards that method. So coming to the chart settings, so I'm using 5 minutes time frame and I'm using spot chart, and I will be marking previous day high, previous day low. Then there is a supply zone and demand zone. We can selling zone or buying zone, and swing high, swing low, gap borders, virgin CPR. So in this mainly I was focused on PDH, PDL, supply zone, demand zone, and gap borders. This is one of the new word. This is gap borders. So how these gap borders are helping us to take the support and resistance. Also, it is also helping us to decide your stop loss or decide your exit. So this is also very interesting thing regarding this gap border and virgin CPR. So as I said, virgin CPR will be helping us for the support or resistance for the next day, and it also remains for next 4 to 5 days. Of course, we are also going to use the CPR and pivot points. So this will be the chart settings. So if you look at these examples, so there is a gap border which I marked it on the chart. There is a indicator which we are using CPR by KGS. So in this indicator, I am using for the day trading daily. So I have selected only daily settings. I'll be showing that. So, and you will also see the previous day high, previous day low, and S1, S2, R1, R2. So this is the 2 levels in resistance, 2 levels in the support, and followed by this central pivot range, CPR. So the central line, I marked it in pink so that sometimes the price will be touching it and reverse it back. So that's the reason I changed the color to the light pink color to identify that that is a central PP. So this is the broad picture of the chart. And for the confluence, along with the CPR, exponential moving average with 21, and there is other 3 indicators, this NMCD, RSI, and GMMA index. So this is the other indicators, as we said in the beginning. So with the CPR alone, we should not take a decision for the bullish or bearish, and also for entry exit. So for the confluence, we are using these 3 indicators, which will give you the you can more confidence for going further of selecting our entry, exit, and stop loss. So this is a gap border. So whenever you wanted to mark the gap border, you change it to the daily time frame, and you can see this recent gap border which is generated in the May. You can say 1st and 9th dates. So when this gap border is marked, so what happens is, if you look at this, the price comes and touch that gap border and it reverses. So during that particular day, if you are marked on the daily chart, and when we go back to the 5 minutes time frame, it took, we consider this as a resistance, it took touch it and it reversed. So we can beautifully, we can use these gap borders for our entry, exit, also for the you can say target. See, this is the example. If you can look at this on 23rd May, if you can see that the gap borders, how this is behaved. So market was started and it was touched one time slightly the gap border, which we have seen in the earlier. It's already marked 6th May gap border, and it retraced. As I said, most of the times I select the retrace trades. So when it retraced, again it touched, then it come back. So here for taking the better support, I'm using this exponential moving average 21. So whenever this crossing, you have a sure shot. That means there is a sure you will be getting the trend towards that. So it touched this gap border and it reverses back. So here I took the short position. And where will be your exit? See, based on your the ratio like 1:2 or 1:3, or you can take the PDH or CPR level. So here the first one is PDH it touch, next one is CPR level. So if you are going for trailing the stop loss, you can go through this way. Based on the trend, you can play accordingly. Otherwise, you can also put your 1:2 ratio. Stop loss will be above this gap border. You can see this, there is a rejection here. So we can put above this, and entry is this candle and exit will be previous day high. That's it. So this is the advantage of marking the gap borders and monitoring the gap borders on our regular time frame, whichever time frame you are using it, and taking the entry, exit, and stop loss. So you can see this. Whenever these gaps are generated, gap borders are there, most of the times this market don't like these gap borders. So what happens is gap trying to fill it. So there is a recent one example where the gap is trying to fill. So how do you notice that is whenever this bottom gap border is broken and based on our trend, then what will be the next target is it will be targeting to the top gap border. So that means it trying to fill this gap. So that is the indication with the gap border. So there is other two patterns which I was trying to look at the what you can say trading. I got this gap up rejection pattern. So if you look at this gap up rejection pattern, there is a gap which we can identify here. Then there is a, you can say previous day high, previous day low, mark. So when it reverses back and it touch, then what happens? The market is fallen down. So we'll be taking the entry according to this. See, the first candle itself is a bearish candle, and it touched that the candle high, that you can say initial balance high, and it reverses back. So you can keep that B. The B is your stop loss. You can take entry on the reversal of where it is touching this initial balance high. Then you can exit at C, that is previous day high. So this way it is gap up rejection, means reversal rejection. So it touched to the initial balance high, but it never sustained and it come back. So if you are failing to this, the second entry where you can take is based on your exponential moving average. And you can see this blue line which is crossing, and when the red candle cross this one, you can take entry at this red candle and you can exit at C. This is the other way you can take entry. But what happens is, if you are very familiar with this price action, there is a words which Mr. Frank Ochoa uses, initial balance high and low, where he draw for the first candle itself. So whatever the first candle form, he draw initial high and low. So based on this, whenever this candle broken, that as for price action, we are very well knows that when the lower broken and lower lows is generated, naturally it is going for bearish movement. So for the better confirmation in the CPR range, I use this exponential moving average. So when this crosses this, so I have a sure shot that it will be going bearish movement. So in that case, you will be capturing this momentum of these points. So this is also one of the method. But as we are in our group, we know that we don't want to lose the points in any given point of time. So we are entering in early stage and we are capturing maximum momentum. So this is a gap down rejection. Again, when gap down is happened, so there is a gap border which is helping us to decide for the entry. So if you see this gap border and gap down happen, then it come back and it cross that gap border. As I said, whenever this crosses the gap border, it try to fill the gap. So when it try to fill the gap, then what happens is based on exponential moving average, we can see whether it is crossing it. If it is crossing it, this will be your entry and your exit will be till the gap fill, or else you can take your risk reward ratio 2 or 3 or based on that. So you can exit accordingly. So this is the gap down rejection pattern. If you look at this example, there is a gap. So gap down happened. Then once it touch B, so it is indicating it is trying to fill that gap, but it not broken this level. It come back. Then again it retested. Then it was consolidating in this C and D positions. After that, it broken that level. So when it broken that level, so what happens is, we are very clear that it is retested this level and it is broken that level. So previous candle low is my stop loss and you will be filling that gap. So till that gap fill, you can wait. If not, you can go with your risk reward ratio and you can exit it. So this is the gap down rejection pattern.
Arvind, sorry,
Yeah.
can you go back to the previous thing? The previous, no, not this one. No, where there is a gap you have marked, the one you left last, I think the next one. Yeah, where you marked A, where you marked the gap clearly. The next candle. No, sorry, next slide.
Yeah.
Arvind, are you able to hear me?
Yeah, I'm listening. Yeah,
So
please.
can you go to the next candle? Just the last, the one
Next slide. Yeah, this one.
No, the one before where you marked the gap. No, the previously maybe.
Okay. This one.
A, B, like that you marked.
Yeah, this is the first one. Example A, B.
Where? Yeah. Oh. No.
The next one.
The question is, I am not clear about your marking the gap. This one.
Yeah.
Okay. How you mark the gap? Can you please explain in this? Because you have marked the previous day low, the gap, right?
See, this is the this is called as a
point A.
Yeah.
The point A, yeah, that one. Yes. Can you explain that?
See, this is the gap this is called gap. We call as a gap border. So there is a gap generated between previous day and this day. So there is a gap. So actually, what you can say, this A should not be here. Normally, only A is here. The 25th, that is the A. So this is the gap actually, when the gap is generated between this candle to this candle.
Sorry, so the gap is not between the previous day close and today's opening, is it?
Sorry?
The gap is not between the previous day close and the today's opening, for example, 2 days?
Arvind, the question here is, you've taken the day low and then previous day high in terms of the open. Mr. Jagan is asking, the low is slightly at the close of the previous day is slightly above the red candle.
See, it is trying to, you see, it is trying to fill the gap. So when it's trying to fill the gap, so it is trying to touch that, the previous day low.
No, Arvind, the question again is, where's the previous day close?
See, previous day close is, this orange color line. Can you see this orange color line?
The close is the red candle.
No, that is not the previous day close. The previous close is in between your A and that orange line, as I see from the chart.
The last red candle, the third candle where you mark the first A, the third
Okay.
candle, no, A.
Yeah.
The next candle,
Yeah.
no, the top A.
Okay, this one?
Yeah. The third candle from there,
Okay.
that's the close.
See,
Correct?
okay. Yeah. Okay.
So you talking about as the
1 second.
close or you talking about the low?
I'm talking about the low.
Then
See,
this
this is
chart
the gap
doesn't
down.
show,
This is the
then
this
this
is the
chart
gap.
doesn't show the low because I do not know that was the previous day low. It could
Absolutely.
be, if you go to the left of the chart, there could be another low. I am not sure.
See, it is trying to fill the gap. I'll show you the example in the live chart. I'll show you the example of the live chart, this gap down rejection pattern. Yeah.
Okay.
Okay. So I'll go back to the chart, then I will come back to the summary. So everyone can see my chart.
Yeah, yes, Arvind.
So this is the chart, which is the CPR. So I'll just take it. So all the indicators. So we are using CPR by KGS. So coming to this, the settings: daily pivot, daily BC, daily TC, and R1, R2, S1, S2. So R1, R2 is marked in red, and S1, S2 marked in green. Okay, and previous day high, previous day low, which is marked in black. So, and coming to this, since we are doing this intraday trading, so I'll be mainly focusing on the daily pivots and previous day high and low. So this is the settings for the CPR. So coming to this EMA exponential, we are using 21 for this CPR, range for the entry and exit. And for confluence, we are using NMCDA, RSI, and GMMA index. So for entry and exit, for entry, I use this blue vertical line, and exit, I use this black line. So the latest one, if you see the last day, 27, there was and just put it into, sorry. So it is a wide CPR. The range is, between the top and C, that range is wide CPR. So that was the reason the market was, most of the times, it is in the sideways. So there is a less chances of trending day. So if you are adding with the other indicators, so with the confluence, there may be some chance which you can take it in the 12-15. You can say that 12-15, which you can see here, with the NMCDA, there is a change in the color, and RSI is also above, in this particular point is around 55, and there is a small, you can say around how many? 1 second. There is a small peak we took it. It is around for this range is around 100 points on this range, but roughly it was came. But however, I was not traded on that day due to other reasons. So this was in general, whenever this is a wide CPR and sideways or this one, normally please try to avoid. Okay, coming to the previous day. So on 26, so I took it. So you can see here, this is the example for gap down rejection. So I'll go back to this day chart. So I have marked here. See, there is a gap borders. So as I shown in the PPT, this is the May 9th to May 16th, there is a gap border. So what happens is, see, this is the gap border bottom line, and this is a gap border top line. So we will be taking that gap borders as a support and resistance. So depends on the situation. So if you look at this 26, so there is an entry at 250. So this is the gap down rejection. How this gap down rejection? So the candle started below, say 9:15. This is the gap border of the 9th May to 16th May. So the candle started here and it touched this gap border and rejected, and again it is crossing this bottom gap border. So when it crossing this bottom gap border, if you look at the confluence, so if you look at this, there is a trend change in the color. And if you look at this RSI, so there is a RSI is also above this 60. So, and this touching this gap border. So crossing this gap border. So where will be my entry? I'll be entering in this particular candle, and my stop loss is below this PDH, that is previous day high. This is the PDH. So it is previous day high, and my target is, it is going to touch this gap border top. That is, if you look at this, it is trying to fill this gap. So that is what I was trying to explain in the PPT. Whenever gaps are generated, most of the times market doesn't like to keep the gaps. It tries to fill the gaps. So this is the gap down rejection. So there is a gap down and it tried to touch that, it reversal. Then again, it crossed this candle. So it touched up to the gap border closing. So this is the gap border, top gap border. We can say this top and this is the bottom. So this is the one. And why the probable is, if you look at this, there is a evening star. So it is trying to fall down and it tried to touch the CPR. So this is the CPR on that particular day. So if you look at this, it tried to touch and it reverse back. So whenever it touch and reverse back, as I said, most of the times I try to take the reversal, retracement trades. So when it retraces, then I have a confirmation that with the CPR, it tried to fill the gap. So I took this trade. So this is the entry, this is the stop loss, and this is my target. So it is fill the gap. If you look at the second example on 25th, see here the retracement with respect to EMA 21. So how it is, okay, let's take the confluence. So here you can see this, it is so it is it crosses this 20 EMA and it is falling down. So that gives me that the trend is going to be a what you can say bearish kind of momentum. So I took this narrow CPR. So narrow CPR, we know it is a trending side. And if you look at the confluence, the trend is reversed. In the NMCDA, the color is changed, and RSI, the level is in this particular range. The level is going, you can say bearish level. And it is also, if you see the GMM index, it is also short index. So I took this entry here, and exit is, it is touching to the pivot range, means the top. So after this 20 moving, means exponential, 21 exponential, when it crosses, then I take the second one, because it is for me confirmation saying that it is going to be a bearish momentum. And it is till where is your what you can say target is, it is targeting to your CPR range. That means top. So because it's a
Arvind,
yeah.
sorry to interrupt.
Yeah.
You are using a 5-minute chart, right?
Yes.
So can you are now in a 15-minute chart. That's why it's not becoming clear. Can you change it to 5 minutes?
Okay.
And then show the same thing? Then people will understand. Otherwise, it looks as if you will get only less points.
Okay.
So,
Okay.
yeah.
So, okay, I'll just quickly go back and put the 26th day. You can look at this with the 5 minutes. So here, it is the gap down rejection, as we say, the gap up, and this gap border, it is crosses. And where is my entry? So I have taken entry because, as I said, it tried to reverse and come back again. So this is my retracement, means reversal. So this is a very clear, sure. Why I'm very clear? Because EMA 21 is also, it tested and it crosses. So this is also one of the very important one, which I take it into consideration for entry. So now this is my entry. Stop loss is below PDH, the previous day, means below PDH, the previous day high, and target is, it is up to the gap border high, that is TB, that is a top. We know this is a gap border range and until it touch. So either this, or you can go for your risk reward ratio also. 1:2 or 1 or 2 or 3 or 4. Choice is yours. But majority of the times, as I said, market don't like to keep the gaps. You try to fill the gaps based on the trend. If you feel the trend is towards your side, definitely you can wait till the gap border. It try to fill. So when it reject, you can see that it touched the gap border, it reject. This is my exit. So if you look at this.
Sorry to interrupt. You have just 5 minutes. This example is a good example. We understood. So other than that gap, you have any other example to show on the other concept?
Yeah, I'll 1 second. I just see, roughly it gave around 300 points with the keeping the stop loss. If you see the stop loss, and this one stop loss is 0.2%, and your target is came around 0.8. Normally stop loss I am keeping 0.1 to 0.2%, and target you can keep your based on your next R1 or based on the risk reward ratio or next level.
This is 4%, right? That's what you're saying. Risk reward in this particular trade is 1:4, if I understand correctly.
Yeah. I'll just put it. So. Yeah, 1:4.
Okay.
So I just wanted to just quickly, I'll just show one Virgin CPR, so example, because this is also one of the very important. See, this is the Virgin CPR, which is formed on 19th. See, in Virgin CPR, you can very clearly see the price is never touched the CPR range. So this is called Virgin CPR. So as I said, in the Virgin CPR levels will be active for next 4 to 5 days. So you can keep this, you can mark this level. This is the range which this rectangular with the pink color shadow. This is the range which is the Virgin CPR. You can extend it for next 4 or 5 days and monitor it. You look at this next day on 28th May. The candle, first candle is a green candle. Okay, so you can keep the confirmation by price action and also like initial candle high and initial candle low. So it broken the initial candle high, and this is the entry. If you look at with the 1 second. With the confluence also, see already in the GMM index, it's given early entry, but based on this, what you can say, CPR, and also with the price action, initial balance, high and low. So I took it this as entry. And where is my exit? So my exit is see till that gap border. So this is my exit. So if you are what you can say confidence and you are trying to hold the trade for some more time, you can also hold it till your virgin CPR range. As I said, this can work as a support or resistance. So this way you can make use of this virgin CPR range and you can go for trading with the levels. So
got a few questions here. In terms of indicator confluence, please. The strategies that you're showing up.
Okay.
The confluence of the indicators also, if you could just point those out.
Okay, so I'll just take this one. Okay, this is the confluence of indicators. Okay, I'll show this NMCDA, RSI, GMM. So you can see this, there is a trend reversal because this is a short trade. So in NMCDA, the trend is reversed and there is a RSI, there is a crossing. And if you can see GMM index also, there is a crossing. The short index is going down. Is it clear?
There is a doji appearing before that candle as well.
Yeah, here. Okay. Yeah. So this is the confluence which we can go for a short trade. And where will be the exit? As I said, the level is PDH as per the CPR. And you can also look into the other, you can say here, I can find slightly, it is trying to change the color in the NMCDA.
Thank you. Hope, Rampal, this answers your question. We move on to the next question. That's from Samir. He's asking whether there's a difference between inside gap and outside gap for a particular strategy. Is the question clear? Mr. Jagan, if you could just get that question. Inside gap and outside gap for any particular strategy. Samir, if you could just ask the question, if you want to be specific, you could just unmute yourself.
So what is
any other
inside gap and outside gap?
Any other questions, please? Thank you. I think we over with the time, Arvind. I hope you through with the presentation. Mr. Jagan, would you want to elaborate any further, or we can move on to the next person now?
Let's go to the next presentation. There's only, we already extended by half an hour.
Yeah, precisely.
I want Rakesh to have enough time so that he can finish his presentation.
Yeah.
Okay, thank you.
Thanks. That, my friends, was Arvind, who's added another weapon to your armor, the CPR strategy. Hope you guys study it further and master it over a period of time. Thanks, Arvind. We now have Rakesh Chaudhary from Pune. I wouldn't take much time. Rakesh, could you please share your screen?
Yeah. Thank you. Yes. Thank you, Avinash.
Yeah, Rakesh hails from Pune. Till the time he shares his screen, I'll just give you a lowdown. He's been trading equity since 2006. He's become a full-time trader. That's where I goofed up between Arvind and Rakesh. Rakesh is a full-time trader. He's been trading full-time since 2019 now. And he's going to be presenting Renko strategy without any wasting of any time further. Rakesh, up to you now.
Thank you, Avinash. So my voice is clear?
Yeah, absolutely clear.
Okay, so we are now going to discuss about this Renko swing trading strategy. It has been already discussed before also, but again we will revisit because there are some changes. This strategy, as usual, designed by Jagan sir, and I'm working on it. Nilesh has given me a lot of help in this, so he has also good contribution in this particular strategy. So on this slide, you can find out on the typical chart layout how it will look like. It will be chart 2.1 version 4 released on 19th of May. It consists of the body chart consists of Renko charts, KDJ, then super trend, 5 EMA, 10 SMA, 21 SMA, as well as we have a GI index, we have awesome oscillators, and we have a Renko RSI. We will go in details in next upcoming slides. We will finish the PPT first. We will try to understand the concept, entry, exit, and some typical examples. Then we will shift to the trading view for the more examples. So the strategy ingredients, as we already discussed, we are using Renko charts, 1 minute time frame, and the box size is 25. We are using KDJ index by Mr. IM altcoin. We have a super trend inbuilt, 5 EMA, 10 SMA, 21 SMA. We are using 10 in 1 by Mr. Himanshu because that have some good advantage, and Nilesh has already explained to me. We are using GI by Daisuke Gavin. We are using Renko RSI inbuilt, and we are using Awesome Oscillator that is also inbuilt. Yes, now we will talk about few things about the Renko charts. Since it's not so common, it's a little bit different from other charts. Why it is different? We will go through details. The Renko charts are composed of bricks. The brick can be of any price size. So we can define the price range, and that is called as a box size. In our setup, of Bank Nifty, we are using a box size of 25. Renko charts have a time axis, but the time scale is not fixed. That means some bricks may take a longer time to form it, and some will take a lesser time. The bricks will form only when the price moves by a box size in a particular direction, and if the price moves double the box size in opposite direction. We will discuss in detail in next slide. Renko charts filter out the noise. Since there is no wicks, there will not be any action. If the price doesn't move beyond the borders, we will not find any noise. That's why these charts are considered as a noiseless charts. Those are known as a noiseless charts. Few more things is Renko charts typically only uses the closing price based upon the chart time frame we have chosen. We are choosing the list time frame of 1 minute to get advantage. And this Renko charts is used for the swing trading, which works perfect and best for the swing tradings. Below we have two pictures. One is a typical candlestick charts. You can see a lot of up and downs over there, and the trend is not so clear. But if you look at the picture on right hand side, it's a Renko charts. The trend is quite clear, whether it's uptrend or downtrend. That's the basic advantage of Renko charts. Trend is very clear, support resistance are very clear, easy to trade, no noise at all. Okay, is it clear? Can we move to next slide? Yes. So here the Renko basics, how we would like to discuss about how the bricks are formed. This is an example of one stock, hypothetical example. Here I have chosen a box size of 5. So each brick is having a height of 5. Let's say this is a start. So when the price is at 95, the brick will complete only when the price crosses 100. Till the time it will not be complete, it will be just a half a candle, and we have to consider the completed candle only. If the price further moves above 100 till 105 or even above 105, then only the next candle will get printed, and these candles are considered as known as a continuation candle. Remember, this candle will only get printed if the price move by the box size. That's clear. Then we will look at for the this another candle, that is a red candle, is called as a reversal candle. You can see from this candle to this candle means price moves from 105 to 135. It's in a green side, so it's an uptrend. Those are a continuation candle for that. my first reversal candle is starting at 130 and it will complete at 125. So price has to travel from 135 to 125. That is 10 points. That is twice the size of the box. Then only my first reversal candle will get printed. And that is called as a reversal candle. Is this clear? Hope is clear, and because a lot of confusion on this, friend, some people have. One more thing, sometimes because of the dynamic movement, you can see multiple candle shows supposed to build, but it will consider the closing price of the particular time for printing, final printing. Like that, price move from 125 to 115, and again that particular at that particular minute it closes 125. So only one candle will get printed, but you can see next candles also in between. So that's only the small concerns about the Renko, but we have to consider only the completed candle. We need not to worry about this upcoming candle. Clear? I'm going too fast. I'm not going too fast, right? Hello.
Yeah, Arvind, continue.
Okay, fine. Yes.
Rakesh.
Yes, sir. So on this slide, we'll be talking about few settings. The Renko has basically have added pictures for this. So basically, it is having box size assignment method. We have two ATR as well as traditional. For this setup, we are using a traditional one, and as discussed, we are using a box size of 25. Rest of the things are almost by default, so we did not to change anything on that. So
Sorry, Rakesh, let me interrupt.
yes,
See,
please.
why it is 25? Maybe people have doubt. Why not it is 10 or 20 or 40 or whatever it is, right? So the answer to the question is, it is 0.075% of whatever the number. That is, for example, it is, let's say, 34,000. If you calculate 0.075%, you will get 24.6 or something like that. You can take 33,500, 34,000 approximately. Similarly, when you do for Nifty, the box size will not be half of that because you are taking 0.075%, right?
Yes.
So
yes.
the derivative, what is this 0.7 is based on certain backtesting result, and then they found that this is the ideal size. So that is why we are choosing, and also we are choosing traditional. We are not choosing ATR. There's another reason for that. But now for this presentation, we'll say that, for example, if it is moving to 40,000, then the box size will change because
Yes,
you
it will
will
be.
calculate 0.075%. Okay,
It
thank
will
you.
be 35 in that case. Thank you, sir. Thanks for explanation. Okay, so it will be 0.75%. Okay. Yeah. So my next slide is about KDJ index. It has been discussed many times. It has been explained by many presenters before. So I will be just touching about the few points which is very relevant to this particular setup. Already Nilesh has mentioned in his setup, in his presentation today, that it consists of two colors, green background and rose color backgrounds, and we just need to think about it. We have to ignore all other factors. In this particular setup, this KDJ index is merged with the price action, sorry, body chart, and Nilesh has already explained during his presentations how to do that. So green backgrounds indicate bullishness, red background indicate bearishness. Never go, thumb rule, never go long in bearish environment, never go short in bullish environment. This is the very simple rules we have to follow. Next one is GI, the GMMA index, which is also already discussed many times before. And it consists of two lines. Green lines is a short index line, red lines is a long index line. The typical range is plus 0.5 to minus 0.5. Rising index indicate bullishness, falling index indicate bearishness. When both of the index are at plus 5, that means there is an immense bullishness. And when both of the index at minus 0.5, that means there is a strong bearishness in the market. Okay, so the next one is awesome oscillator. As the name indicates, it's an oscillator and it's really a beautiful oscillator. It indicates trend as well as the strength. If the bars are above zero, that means they are bullish. If the bars are below zero, that indicate bearish. A red bar above zero indicate the retracement, and green bar below zero indicates the retracement. Very simple things we have to remember about this oscillator indicators while dealing with this setup. I have not mentioned the setting because those are default settings we are using as of now. Few other indicators we use, that is the super trend. The simple thumb rule, the price above super trend bullish, else is a bearishness. This helps for trend identifications and this provides immediate support and resistance. It also helps for trailing SL. It also helps us for riding a trade for a longer time. How we will explain, we will discuss while we are on trading view. The next indicator is a Renko RSI. It is quite similar to RSI, typical RSI, but it has some uniqueness. As we discussed in a Renko charts, ignores the time. It focuses only on a price changes. So we are missing the time, but the Renko RSI consider the time as well. So that's why we use the Renko RSI instead of a regular RSI over here. This Renko RSI is calculated by their own algorithm. So we have very less control on that. We don't have any specific setting as well over there. We will move to the next indicators. Those are moving averages, 5 EMA, 10 SMA, 21 SMA. Rising averages with a distinct gap indicate bullishness. Descending averages again with a distinct gap indicates bearishness. Crossing averages with tapering gaps indicates the sideways market. And as we all know, being an option buyer or being trading in a momentum, we like to have a momentum, we like to have a trend. Sideways markets are chopping for us. So few settings about the
1 moment, Rakesh. I need to rather apologize for a small thing. This Renko RSI and RSI, what is the difference? Now, you have explained very clearly, shortly, but I just want to add one more context to that. See, the RSI, the moving averages, the MACD, which we work with all other strategies, is not exactly with Renko. So if you try to blindly apply that in this, it will not give the exact signals, all the three, right? So because why? Because one basic element of time is completely forgotten in the Renko. It is basically a trend direction, but also it is one of the very easiest strategy to follow for beginners. If you look complicated, you want to take the simplest strategy. Two strategies are the simplest, or three rather, which is your super trend strategy, Renko strategy, and this alligator strategy. They are the most simplest, whereas these Bolinger bands, the GMMA, and all the other things are, and there are more charts which has been revised and the more version like regression analysis, those kind of things which we'll be discussing later. Those are the complex ones. So if you are not an experienced trader, the Renko chart is one of the simplest, provided there are some pitfalls, if you got, which I'm sure Rakesh will explain later in the presentation. Now, what has happened, RSI in this chart has been adjusted using this algorithm. It's outside the trading view. So one person has done, one of the prominent traders, he has created this algorithm outside the trading view. That's called an engine, right? An engine was used, and then he has linked it and put it as a trading view indicator. But most of the calculations are done outside the trading view. So similarly, we should have done it for the moving average and also for the MACD. MACD, there's no big problem because it is a much broader indicator. But moving averages, particularly those closed ones like 5, 10, 21 age, not 21 SMA. 21 SMA normally should work, but the shorter ones like 5 and 10, we need to adjust it for Renko. That has
Yes.
not been done. So I did search to get as much as possible whether somebody has created a separate algorithm for these moving averages. I could not find, but someone has promised that that will come soon. So for this purpose of presentation, I would request Rakesh to put the eye off for the averages so that it is clear. But for experienced traders, still they can use the being that the even though they are not the Renko moving averages, still they can serve a purpose, showing that if they are very thin, that means you are in a sideways market, and they are broad, even though they are not the correct numbers, even they when they are broad and the breadth between these averages are large, then you are in a momentum based market. Okay, so it has a limited purpose for now. So maybe Rakesh can, when he shows the trading view chart, he can off that average
Yes,
indicator.
sir.
Then we will go back to add that when I'm able to get that algorithm to get to adjust for Renko to take the time value. Okay, Rakesh?
Yes, sir. Got it. And in fact, I had one small observation from my side. I will share it in what you can say trading view. What we can do, we can keep this, and whenever we want to identify the consolidation phase, we will just toggle between Renko and candlestick. Then probably we can get advantage of this indicators over there, and we can figure out the no trade zone over there. And that will it that work? I think it will work. Just toggling from Renko to candlesticks just to understand if we are in no trade zone or not. Jagan sir.
Yeah. No, this is fine.
Okay.
I
Okay.
think they will understand when you actually go to the
Yes, yes,
chart.
yes. Sure, sure.
About
Okay.
then you're going to talk about the no trade zones and other
Yes, yes.
stuff.
Okay, sorry.
Yeah.
Yes, sir. A few those are few settings regarding super trends. We are using 7x3 as of now. We may refine it in future. On Renko RSI, those are the setups 1425 to 8020. So we don't have to change anything in that one. Other non-specified settings are at default. Whatever we have deviations, we have plotted in this PPT. Okay. So now this is a particular slides where we talk about the entry, exit, and SL. So my typical entry will be the completion of the reversal brick associated with indicator confluence is my entry. So on this picture, on the completion of this candle will be my entry. My SL will be end of the previous continuation candle. Sorry. So this red candle bottom end means the close of this red candle bottom will be my initial SL, and my exit will be the next reversal candle. So on completion of this red candle, I will exit. So this very simple entry, SL, and exit criteria. Regarding the exit, we can refine the indicator confluence as well. But initial days, we will exit based upon the first candle. Okay. So here we talk about, here we have added some examples. Example one on 26 May. You can see my entry will be over here, something at 1217, and the price will be 34,550. Here everything is sync. My GI is giving me a bullish signal. Renko has already given me a bullish signal. We are in a green background, means KDJ is also aligned. My awesome oscillator is also turning green from red to, and it probably is crossing zero. And my Renko RSI is also giving me a green signal. Is a bullish signal. So this is a clear entry for me. And my exit will be end of this candle. Okay, when I take a entry at this candle, ideally my stop loss will be here, this red candle. So these two red candles will not hit my stop loss. So we will be getting close to 320 points in this particular trade. Based upon experience, we can refine this entry and exit, but as of now, we will follow the rule completely. We will enter only on the confluence. Clear? Jagan sir, do you want to add anything over here?
This background of KDJ gives a lot of value addition to this chart.
Yes,
You
sir.
are in the green, so you are safe, right?
Yes,
So
yes.
you have to really, this background of KDJ, and actually you can see very clearly the start and this the ranges or the trends are very clearly coinciding with the background chart, right?
Background chart. Yes, sir.
So
Yes, sir.
two things. One, you know the trend, it's confirmed, the background is not changing, it's green color. So you are confident you can ride the entire touch. This is the one biggest advantage. Second, you cannot trade on the opposite side. So you are careful. So your losses are very limited because you will not take a short trade in a green background or a long trade in a rose color or pink background. So that also saves you from wrong entries. So
Yes.
it's quite a safe thing. When particularly, what I'm trying to say is don't ignore the background. It is giving a lot of things, and as you can see, the trends will coincide with those bands. Okay.
Yes.
Yeah.
Yes.
Thank you.
Thank you. So we will go to the next example. That is on 24th May. So my entry will be here, something 1307. Price will be 34,375. Here we are getting, oh, what happened? Sorry, here we are getting all confluences. Background red. Renko chart also given me a signal. GI is also in favor. Awesome indicator red, and Renko RSI is also giving me a bearish signal. So that will be my entry. And ideally, I can exit at this point, but we can ride it long since my super trend is not giving me a sell signal, and there may be possibility it will go touch the super trend and come back again. So there are two ways: either conservative way, we can exit on this candle and re-enter next way when on the rejection from the super trend, or you can ride it till the end point, means 1455. So based upon your personal style, based upon your risk appetite, based upon your entry and how much profit you are sitting on, you can decide whether you have to exit on a first candle or you have to exit on confluence. So those are the refinement, and individual can handle in a different. Correct. So if you have any doubt, we will discuss, or if not, then probably we will go to the trading view to analyze further.
There's one question from Rampal here.
Yeah.
Why we did not enter when the RSI oversold, but Renko candle is green?
RSI oversold. Renko candle is green. This candle he was talking about?
Yeah, Rampal, if you could just tell which chart were you referring to?
Probably he is talking about this candle only, right?
Till the time Rampal gets back, there's another question. Okay. Yeah, this candle. That's what he's saying. Yes.
Yes. As I mentioned, if you are a conservative trader, probably you can exit at this time. But I know that we already are in a bearish trend because everything is in bearish at that moment. And my RSI has not yet given me a signal. So I am ready to take risk and I will exit only when my RSI, sorry, super trend will give me a confluence. Here I am getting confluence of everything. My GI is also in bullish. We are already in KDJ also giving me bullish. Candle is also giving bullish. Here AO means awesome oscillator turning green, and yes, Renko RSI is also giving me bullish. So I would like to exit over here. So that's the reason. It depends again. Yeah. Hello.
I don't see that this Rampal's example of RSA oversold. I don't see that at all. Where is it? Can you point out to me exact time?
This sir is something 1319 post. The first
Yeah,
green
where
candle.
is it? Where the RSA is oversold? What is RSA oversold?
Oh yeah, probably at the end it will be inside. No oversold even.
No. It is not RSA oversold.
No, it's not a case of RSI also.
So there is no, see, let us not do on hypothetical cases.
We will go to chart then.
We'll go
Yeah.
to chart. Let somebody show that there is a, then we can
No.
answer that.
No, Rakesh, he was referring to previous slide.
Okay.
See, there is one.
Hello.
I
Hello.
think we lost Mr. Jagar in between. You could carry on.
Okay. Yeah.
Sorry,
So
sorry. Let
Yeah,
me interject here. One fundamental thing we need to explain. See, how do we trade? We trade on the basis, where is the strategy? The strategy is in the body chart. We trade on the basis of the strategy, which is on the body chart, right? That body chart, I mean, is not the pants, the central portion here in this case. We don't trade on the basis of indicators. So many people make this mistake, which I was talking to a few people. For example, they just look at Willy and then they trade. Or they look at GI and trade on the basis of indicator. It's completely wrong, because each indicator is relevant in a particular market sitting, particular thing. That's why we are using 3, 4, 5, 6 indicators to get the conclusion. And then we say that it's not enough if one indicator confirmation is enough. So what we mean by that is, indicators are for confirmation, on reconfirmation on your entry exit levels. What you trade is based on the chart, not based on the particular specific indicator. So here in this case, this exactly the Renko brick is the direction, is the strategy. We are using a background of bands which is coinciding perfectly with the movement of the bricks, both bullish and bearish. So this is what you trade. And once you want to decide to enter, then you look at the confluence. Is the other indicator saying the same thing, or is completely different? Most cases, you will get the confluence because we use the indicators which is aligned with that particular strategy to get a rounded view of the trend, volatility, volume, and the reversion, and the other, what you call the momentum, right? So we try to get a holistic view. So we are adding this indicator. So we don't look only at direction. We want to see that there is also momentum, because we are momentum traders. We want to see that there is a volume to support that, whether the buyers or sellers are in control. So we use all those things to get the confluence. But we don't trade on the basis of indicators. So when the question comes, even if RSI is low, there is a case of divergence. So what does it, even if that is the case, as Rampal says, what does it say? It means that the trend is weakening. There is a divergence which Nilesh was explained. So you have to understand this concept of divergence. It is well possible that you can have an RSI divergence in many cases, and that indicates that that particular trend is getting weak, and then there is going to be a change direction in trade. So you get ready and you will see that there is a change in direction. So that is the way this setup should be understood.
yeah,
Rakesh,
and
you can continue.
yeah, one more thing I would like to add, why we will not exit over here, because we initiate the trade here, and when we have initiate the trade, our stop loss defined is over here. It's just further 25 points from this point. So we will wait for completion, right? Till, and again we have a confluence from we have support from the super trend. So that's the reasons we will not exit on this point. But if such candle comes somewhere over here, then probably we will think of exiting. Is that answers your questions, Rashpal?
Rakesh, there is only 10 minutes more left. So what I say is, you take a very clear example of any other examples you have, then you go to this no trade zone kind of the concept. Yeah,
Sure.
then we can close.
Yes. Okay. So very clear example. We already marked that one on bearish side, right? That was a little
Why
bit.
can't you show in the trading view chart?
Yeah, I'm sharing that one. Can you see my trading view?
Okay, okay, good.
Okay. So here is the another example. Can you see? Let me add the lines so that. Okay. So this will be 9:43, 26 May. I got a confluence. I got a Renko support. My KDJ is red. Awesome is red. Renko RSI is going down. So I will enter on short trade over here, and I will exit on a first reversal candle. Okay. Is this clear example? Is this satisfied? As of moment, I will highlight uncheck this moving averages. So this will be my clear entry. This will be my clear exit. No ambiguities, and it will be close to 150 points move. Okay. I have taken example of this. So if you want not comfortable trading or taking trade over here, you can trade here also. So this could be your entry without any ambiguities, and this could be an exit. This is a clear example. Clear. Everything is aligned over there, right? We will look for another confluence. Okay, here it is. So it will be 26 May 2 to 17. Is this clear, or I need to mark the lines? Hope it will work, right? Okay.
Yeah, that's right. Yeah.
Because in the interest of time, I would like to. So here it will be my entry, and here it will be my exit.
Entries are marked always in blue and exits in black.
Yeah. Correct. This will be my entry, 12:17, and exit will be over here. 14:34. Sorry, not 12. 14:27 to 14:34. So
Rakesh, I'm looking at your example. Your entries are always one block later.
Yes.
You need to look at it, neither in confluence. See, you go mostly here for this one, you give more weightage to the KDJ for this.
Yes, sir.
And
yes,
you
sir.
see a perfect. And all the examples you gave, my feeling is that your entry is a bit late, right? You can have an early entry. You go back to your examples and verify when you have time and see whether these entries could have been taken a little bit earlier.
Yes. Yeah, as I mentioned, there could be refinement.
Because that means 25 to 40 points gains. Okay.
Yes, yes, sir.
Here
Here is the example.
Observation.
Yes. Here I have marked this. I just waiting for a super trend confirmation, so I have taken an entry. But yes, after experience, you can take your entry over here. This point. This is correct, sir?
No. Super trend is not it's a confirmation as long as you are in above the super trend, and this super trend also be adjusted to 21. I don't know whether you have taken that or you are keeping the 10-4. What is that super trend you are taking? Is it 21-1?
No, 7-3 only. 7-3. The default one what we have.
Yeah, so that we changed to 21-3. Remember, I showed you yesterday during the mark. That is why let's change it to 21-1. You'll see that will align this super trend.
21-3.
21-1.
Yeah.
Yeah, you see that super trend will shift to the left.
Yes.
Right? So this is what I said, maybe perhaps I thought you understood that. Then that 21-1 adjustment was made yesterday when we had the mark session. So one.
Yes, sir. Yes.
Okay. Now the super trend is intact, right? With the
yes.
Now again, see, super trend, why it is there is see, you are in a trade for a let's say 250 points ride, 300 points. So many of us and most of the people, the problem is that they get afraid and then they want to get out once they get 30 points, 40 points, 60 points, and they don't run the winners which is a very fundamental flaw in the trading, because our rule is that run your winners long, cut your losses short, right?
Yes.
You exit. And even if you are only 50% right, you will be a very successful trader as long as you follow this gaining points. Now, when you see this and the super trend is also going up, and it is always about the super trend, you don't have the second doubt whether should it exit now, right? You are not afraid.
Yes.
So it is
Yes.
giving you more and more conviction that you are on the right side of the trade because you are above the super trend, right? Even
Yes.
you can add VWAP also to the chart, you are above the VWAP. So you have the conviction to stay in the trade for a longer time. But if suppose it goes below, then you have to have the element of doubt, what is happening, and you have to look at the whole, the other indicators, confluence and other things. So fundamentally, why we are adding super trend is not to decide on the trades or in the entry. The entry conditions are very simple. You see that green or purple candles in this case, you take the entry and exit, which you explained nicely, Rakesh, no problem. But these other indicators, as I said again and again, it is there for you to give conviction to stay in the trade for longer time, right?
Yes, sir.
So
Yes.
in this trade, you see that you are trading on the call side about the super trend, which is fine, right? You got, but we don't decide on the entry based on the super trend. That is
That's clear.
possible in another strategy, not for this strategy.
Okay, sir. Yeah. Okay, so if you want further more examples, or can we go to no trade zones because we have limited time? Okay, so we will shortly discuss about a no trade zone because whenever the price is moving in a closed band, we will get multiple signals and it will hit stop loss in both the sides. So we will need to identify this as a no trade zone and we should not trade over there. We added moving averages to understand that. What happened? It's not responding.
What happened?
It's not responding. Sorry. Training view is not responding to my uncheck. Can you see anything? No.
Yeah. Your cursor is moving. Visible.
Yeah, but unfortunately, it's not accepting my. Yeah, now it's there. Okay. It's got hang for some time. So okay. So I will uncheck, unhide the averages, and here you can see these averages are not distinctly apart from each other. That's the first sign. And further to reconfirm these things, as I discussed, we can shift slightly toggle to regular candlesticks in the same time zone. We can find a typical crisscross or a crossover of the indicators. That's again the noted zone where it is. We were here somewhere. No, sorry.
1240.
1240. Yeah, here from this region to this region, there is a lot of crisscross happening, and that is a noted zone for us. So we can just simply toggling between Renko and RSI, sorry, Renko and candlesticks to identify this noted zone. Till the moment we really find something better on a moving average, adjusted moving averages. Okay. So I think I have covered most of the things. So if you have any questions,
also RSI will be in the middle. It won't be the extremes.
Yes. Yes. The RSI will be oscillating between this narrow band. Intentionally, the RSI has kept the dynamic settings so that we can get quick signals. So when it is just fluctuating between these narrow zones, we can identify this as a noted zone.
Okay, before we close, there is one question, Avinash, you can take it up and then finish. About this stop loss.
There's a question from Varun here. Stop loss will be numerically or will be numerically done as in put a cross over there, or it's basis the box.
Basically on the box.
Okay.
And what happened, since it's very simple, it's 25 the box size, so it's easy for calculation as well. Typically our stop loss is 50 points because we have to our stop loss is 2 candles, twice the brick size. So my brick size is 25 as of now, so my first stop loss will be 50 points.
Okay.
But it based upon the box, not on the numeric. So
Okay.
as Jagan sir explained, when we move to 40,000, probably our brick size will increase to 30 or 35. Then our stop loss will be twice of the brick. Simple.
Okay. Since we're on the boxes, another question for the boxes: what's the box size for Nifty? We talking about Bank Nifty right now.
Yes.
The answer to that as earlier 0.75% of Nifty level, approximately. So you're going to get a box size of about 20, 18, 8, something like that.
Probably 13 somewhere.
Look at this.
Yeah, 12, 13 something. Okay.
12, yeah.
Yeah.
Another question from AP Verma. I guess we'll keep this as the last question here. The RSI on the RSI, you've got that blue band, the marking in between. Is that a no trade zone?
No, it is not like that. See, what the Rakesh explained clearly, there are many things you should consider. You see, the no trade zone is not only new for this Renko. It is applied anywhere in the sideways market. You have to see. It can be seen as a squeeze in the Bolinger band. In the candle, you can see that as a sideways. If you had time, I'm sure Rakesh would have shown you the square in the Renko chart and then convert it into a candle chart and convert it into a Hikinashi will show the sideways market. So sideways market not trading is not only for Renko. We don't do it in Bolinger band or even in CPR, as he explained in before. So the idea is how to identify. Basically, it is not that to avoid. It is not even, you can't call it no trade zone, that you avoid. So you avoid because there will be so many, like, why are you moving this, Rakesh?
Sorry.
Okay.
I just marked that zone.
Do you have time to show this? I do not know. But basically, okay, let me answer this question directly. That you try to identify this sideways movement or whipsaw movement, what we call it, by several parameters. One is that the RSI is not at the extreme. That means there's no momentum, right? Okay. It is either neither at the top nor at the low, that it is somewhere in the middle, let's say 40 size in a normal RSI band. So that means there's no momentum. So the market is sideways. Another way is to compare the moving averages, right? The other way, you can compare even in the NMACD. You look at this NMACD, it is flat. It is near the zero line, right? So you know that there's no big movement compared to this particular box Rakesh has drawn on the left side and the right side of the NMACD. You find it is flat. That means there's no momentum and there's no point in trading and keeping stop loss and getting the stop loss hit. So we avoid. It is not a no trade zone strictly. We avoid trade during the side, and the same thing applies to CPR, same thing applies to Bolinger band, same thing applies to other forms of trading strategies as well, including the alligator. You may remember when those averages are intertwined and narrow, you know that it's sideways. Same thing with GMMA, the main track. Okay, this is the point. I don't know if you have time to show you the candles and Hikinashi on that box. It is for Avinash to decide.
Mr. Jagat, we already pretty late into the time given. It's already 10:08 right now.
So
Any questions?
let's
Probably.
close then. Let's close.
Yeah, probably what I would suggest is if you could just mark it on the chart and put it onto the Telegram group, probably that would be better.
Okay.
Yeah, yeah, you could do that.
Yeah,
And,
it's a good idea. Good idea. Yes.
Good idea. Good idea. Nice.
with that, friends, we take your leave. Interesting session. I hope you've taken a lot from this. And my only request to everybody is just practice. You've got to practice. Unless you don't practice, you won't get it. You just attending sessions, you're not going to gain anything out of it. So a request to everybody, do practice, please. And thank you so much, Mr. Jagan. Thank you so much, all the presenters here. Have a great weekend.
Thank you. Have a good day. Bye.
Thank you, everybody.